Hey YouTube, hey Twitter, X, whatever your name is. How's everybody? You notice I took off my Blocks hat. I was too ashamed to wear the freaking thing around all day. Of course, the Sooners got beat by, this is a Sooner hat, I don't know if you can tell. The Sooners were a little bit embarrassing in their last appearance also. But anyway, all right. See what's going on. Hey, this is a special earlier edition. I want to do an earnings show like a Jackson. Knock it off. Hang on, guys. Jackson, come here. Come here, buddy. All right, I just wanted him to get away from there because I have a short back there, and he was playing by where the short is. I'm afraid it would short out one of my. Come here, Jackson. Come here. Oh yeah. Oh yeah. Look how vicious he is. He's so playful. Oh yeah. Oh yeah. Of course, he wants to start playing right when I come on the show. Let's see what the market's doing. Jackson, you just hit me like a linebacker. Jackson, stay away from underneath the desk. Okay, let's see what the market's doing. Anyway, it looks like Google hit earnings and was slightly, well, it actually is down $6, but they hit earnings. NVIDIA's plus 1%, and we'll cover the rest of them in a second. All right, let's look at futures, or let's look at NASDAQ futures. Those are probably going to be most affected by earnings. Trace Jackson, you all right there, buddy? Now he went over and got his empty bowl, and he's just licking the metal at the empty of his bowl like it's trying to make me feel bad that he's hungry. Jackson. All right, so let's get on a shorter time frame, like a 5-minute time frame. And no, NASDAQ futures aren't moving. NASDAQ futures are not moving as of this point in the day. We'll go back to 30-minute, and let's check out and see how Bitcoin finished up. We'll just look at IBIT. That's an ugly look. I mean, that is not. I mean, because we rallied at the end of yesterday. It's totally sold into this morning. Sold off, made a new low, rallied into the end of the day. It'll probably be totally sold. Right now, we're trading down 10 cents after hours. All right, well, hate to see that. Let's look how, man, AMD down 40% today. You've got to freaking be kidding me. Oh, this is only saying 17%. Maybe it's 41 bucks. Okay, I saw that was down 41. I was thinking, whatever. Still not great. Tesla's down 15 bucks right now. NVIDIA's actually down a little bit. All right, well, man, that's an ugly chart for AMD, isn't it? Let's look and see how Google is. See if Google's dropping from 333 to 328 in after hours trading, which is about the low, a little bit below the low of the day. Good job, Google. You just took out your daily low. You're probably fixing to go a lot lower. Thank you very much, Google. What are you guys doing? All right, well, let's just look at our normal stuff, and then as earnings come across the screen, we can talk about them, and if you guys have any questions. Hey, Michael from the Philippines. How are you doing there, partner? Jackson, please quit walking underneath the desk. I need to put something underneath the desk. He does it to get my attention because he knows I'm afraid he's going to short. Jackson, what do you want? All right, hang on, guys. I'm going to have to give him something to eat. I got too many Cokes. All right. Jackson. Jackson, I want you to eat this, and I want you to behave. Okay, Jackson? Then you be good. All right, guys. Sorry about him. It's he's just a little diggy right now. Okay. All right, guys. So let's look at some stocks. Let's look at some divas, some stuff like that. I hate to do this. BLOX. What are you guys thinking? It bounced a little bit in the close. It was down 6 this morning, maybe down 4.5 or something. 5. 7.92. Holy cow. Yeah, I can't even do my thing. Well, they paid a dividend today, so it's not really that bad. No, that was 2 days ago. The dividend with X on Friday, so 3 days ago now. Well, that is pretty ugly. I mean, it did bounce into the close, but my gosh, 8%. Alt I bounced into the close also, but is down 5% even after the bounce into the close. And as of right now, they're down 2%. So it's essentially down 7%, or it's about a 7% change on the day as well. All right, let's look at ULTY now. I would expect this one to be doing a little better, but not really. Not really. Let's see. Yeah, 3.19. I mean, it's definitely beating those. You know, it's down a little bit after hours. I think I read somewhere that ULTY sold their AMD. Let's look and see if we can. Or they sold some of their tech stocks yesterday. Maybe they're trying to avoid earnings, so they still have Alphabet. I have the junior miners from Amplify, Iron, JBill. Are any of these on Quanta Services? Okay, that one was bad today, down 5%. Southern Copper down 9%. Van Eck, GDX down. Oh, it was actually up. GDX was up slightly. Lamb Research, yeah, that's at least Alphabet didn't miss earnings, but they're still down right now. They're talking about their cloud Q4 or whatever. That 16.18 was estimated. They made 17.7 bill, which is revenue, and it beats estimates. So why can't the darn thing go up? Well, Nvidia's been just a mess lately. So yeah. All right. Well. All right, so let's look at some of the better divas. Let's maybe see if we can find some good news in there. The best diva right now is Chippy. Even Chippy's fallen off a bunch. Chippy's lost half of what it was up. So, I mean, but in any event, SPY and Qs are about flat. Qs are down a little bit, but they were flat about a week ago. SPY was up slightly. Qs were flat about a week ago. Now Qs are down slightly after the pullback, and SPY is still flat. All right. Then of the divas, we have QLDY first place, only down 5.96. The asset it tracks is down 3.5. I wonder if have we done this yet? What do you guys think about QLDY to triple QI? Who do you think would win that contest? Probably triple QI. I know a lot of you guys like triple QI a bunch. I do too. QLDY is a good one. Doesn't go up super fast though. Probably because of the daily option. So I wouldn't be totally surprised if triple QI beat it in a bullish market anyway because of the monthly options. And of course, triple QI pays half. I just answered my question. Triple QI pays half the yield. So of course, triple QI is going to do better. It almost has to do better. If it doesn't do better, QLDY is doing something, or QLDY is doing something right. Triple QI is doing something wrong. Let's see how they compare. Well, they're very darn close. And triple QI is ahead, albeit slightly. And if you look at, here's the equation. In an up market, QLDY is better. I mean, it looks like, because whenever market's ramping up, QLDY is a little bit ahead. And then when the market pulls back, QLDY loses a little bit of ground. And that would make sense just because of the way that's constructed. But I mean, now that's pretty darn impressive. So look at this. The one started at 54 and one started at 50. We're just going to call that even to make the math easy, even though triple QI that's about 8% higher. 4 out of 5 is 4/5. Yeah, it's about 8% higher. All right, well, QLDY has gone from 50 to 45, but they gave you back 7 of that along the way. All right, so the other one, so they lost 5 in NAV, and then they gave you back 7 in yield. These guys lost 1 in NAV and gave you back 3 in yield. All right, so if we were evening it out between the two of them, these guys, well, if these guys paid twice as much, if these guys paid the same thing these guys did, you put 677 in this column right here. Even, and you could even adjust it, do 8% less than 677, about 6.25. You put 6.25 in that column there, and they're roughly the same. They're roughly the same. You know, I mean, yes, triple QI's total return is a little bit ahead, but it's roughly the same. It's just the dividend. It's just the reason triple QI's NAV is doing better is because of it looks, by looking at the numbers, like it's entirely due to the dividend. Because in other words, if you had, okay, QLDI, you're going to pay $3.19 instead of almost $7. We just take $3.19 off of here, then your NAV would have gone from 53 to 47, down $2. I mean, yeah, triple QI is a little better on NAV for sure. Triple QI's NAV was down $1. QLDY's NAV was down about $2. But on total return, they were within a point. You have a bag of Alti. Well, I've been unloading my bag gradually, so I'm not. But yeah, I should have unloaded more of it. I hear you on that dial tone FM. That's a cool name you have. I like that. For some reason, I like that. I like that handle. All right. Well, let's look at some other stuff. But I mean, QLDY. I mean, I'm going to say just based on this little thing that I look. Yes, it's still not as safe as triple QI, which isn't that big of a deal. Or still not as blue chippy, because triple QI is the best one out there, probably the most blue chippy safe one out there. But yeah, it's still a little bit behind at this point. But I do think in an extended bull run, it might do a little better. And it looks like in an extended bear run, probably triple QI would probably do a little better. Hope we don't have to find out about that extended bear run. Hey, Mark, how you doing there, bud? Thanks so much for being here. All right, let's get the banders up here and make sure everything is good. Now remember, just in case I forget to say later, it's not financial advice. Please check anything you hear on the internet or anywhere else with a financial planner, somebody that's licensed to help you make smart, informed decisions. Okay. Oh, Mayor's in the house too. We'll look at that in a second. I'm wondering too, Mayor, but yeah, we'll look at that in one second. Or the guys will probably talk to you right now, but I'll comment on that in a second. Trying to find some good news in the divas. I mean, QLDY's solid. GPTY down 13%, but it has AMD in it. I mean, you know, and it's so yeah, it's going to take a hit. K yield now. K yield. I don't know what K yields. K yield has kind of dropped off lately, but of course, K yield is hedging with gold and silver. If you watch my show yesterday, the Option Bro show, yesterday it was on about 2 or 3 in the afternoon. I was showing everyone Matthew Tuttle's newsletter from yesterday, and he was talking about how gold isn't a hedge. And gold is a diversifier. He didn't say this. This is me talking now. Gold is a diversifier because of the non-correlation, but it can hedge. It can have hedging properties, but it could also, in risk-off events, move the same way as the market. So in any event, and K yield was hedging with gold, or they weren't really. I don't want to say hedging with gold, but K yield is using gold for diversification's sake, and they're sticking to their guns. They obviously think it'll bounce. Teradyne was off 5%. Intel was only off 1%. Intel's the best holding up of the chip companies, probably because it's the least overbought. It's been the worst one for years and years and years. You know what I'm saying? It's been the one most behind. But BWX dropped 9.8%. Wow. And that's the nuclear energy sell-off amid a. Now, this is sweet. This is something AI did without me even asking that is sweet, or it's built into Google Chrome. Look, when you hover over this, see it says BWX technology. Well, you can't see it. Gosh darn it. It's Mayor's fault. Hang on. All right. I think this is cool. So you hover over something, and it's always had the chart and then said BWX Technologies Inc. But then they added the card. That thing that says down there, nuclear energy sector sell-off amid AI hype concerns drove the sharp decline. Now, I think that's new. So you can, and look, it's custom. Like for Teradyne, it shows you what happened to them today. The AI gives you a little bit. That's pretty cool. That's pretty cool. Hey, William. All right, well, let's talk about Mayor's question. He's saying, hey, guys, please someone tell me what the market is doing. I was up 5% this morning, down 5% this afternoon. Now it's back up 5%. Yeah. That is crazy. So Mayor, you say, if you remember correctly, gold held up perfectly in April, but not '08. Yeah. Matthew was trying to hit the point of what he was trying to say is he's trying to encourage people to use options and long volatility. For the only hedge that works all the time is long volatility, because anytime the market explodes, volatility explodes. So if you find some way to get long volatility, that's why pros like Bill Ackman and stuff use VIX. He made like $2 billion on VIX before COVID, or his hedge fund did. You know, you have to be long. So anyway, and it's not just him. There's a guy named Chris Cole, a hedge fund guy from Austin, who's closed his hedge fund past couple of years, but he has a lot of good content on the internet. Anyway, I'm just a big believer in long volatility for a hedge. Now, Matthew could be talking his book. He's coming out with this Ono fund, which is long volatility. But also, I think Matthew likes to make some nice content. He sees a market that's getting ready to crater, and so he puts a few freebies in his newsletter, you know, or ideas. And look how well they've done. So let's just go to expire or close. I'll show you Matthew's ideas. Tuttle. Okay, so Tuttle's idea was plus 131, and I countered. Max's alternative was 742. That was yesterday's trade. And then he had an idea for tomorrow, which was today, plus 447. That was, I don't even know what it was. It was some type of ladder or something. Or no, the put letters here. Well, anyway, but then he had a couple more trades, and they were all up. And then this Tuttle, this one is not his because it's a bullish ratio spread. I was doing that. I was doing this. I was too lazy to change the name. But these other ones I got out of his newsletter. And yeah, look, mine lost. All right, but so then in addition to that, his newsletter had some more trades today, and I had some content on it. I hope you guys saw it. And I also made some really cool study materials for you guys. Now Tuttle's real big on IBIT because it's ODTE, or it's going to be ODTE. It went to Monday, Wednesday, Friday. The next step will be ODTE. But when you have Monday, Wednesday, Friday expirations, trader or hedge fund or whatever can get ODTE exposure 3 times a week. You know, and you can, like if the Powell's talking on Wednesday, you can just buy a put that expires Wednesday. You can get, or Powell doesn't affect Bitcoin that much. Well, whatever, you get my point. If something, there's a big Bitcoin conference and it goes to, and it ends Wednesday or something, you know, you could hedge just till then, which is really cool. Anyway, so he gave us a couple of new ideas today. Go to my Patreon and go download that stuff and check it out on your own. We could talk about it later, but then on the ones that are active. So on the ones that are active for tomorrow, let me see if there's, there's none of his are active for tomorrow. What I did is I took some of his ideas and I put in the same strategy on for Friday expiration. So here's one idea for Friday expiration. I did this yesterday. So this is where you sell a 617, 622 call credit spread, or call credit spread, bear call spread. I just call it selling calls or selling a call spread. You sell a call spread and then you take the proceeds to buy a put. The way Matthew does it, he doesn't try to take his wife to dinner. I mean, he may be single. Maybe he is single. That's probably, I mean, who knows? But the way he does it is he'll look at the put and he'll try to get, or I'm thinking this my way. He tries to get half of the debit from the putbacks. In other words, the call spread partially finances the put. Well, anyway, you know, I mean, this one is looking good for Friday. Now, if we rally between now and Friday more than 1%, it'll, you know, could be chill, but that one's looking good for Friday. That's and that is a bearish risk reversal. It's BRR. That's what it's. And then, but that's, I took the idea from his newsletter. Okay, so this is my idea. Of course, I did the same thing and just put a ratio on it, and it still expires on Friday, but the shorts don't expire till Monday because it's a calendar spread. So anyway, we'll see. Right now, he's obviously doing better than I am. So then what else do we have for? Oh, then I decided let's just try one of his concepts on Ivy Jackson. Jackson. Okay, I tried to hit mute real quick, but all right. Well, so on IBIT, I tried one of his ideas. So let's see. Well, I forget what it was. So let's go take a look at it. No, it was one of my ideas because it was some type of calendar and the short legs expired. Whatever. This one is. Let's just nuke this. I'm just trying to look at these things and mainly at his ideas. But then that's my idea, the reverse diagonal, and then not my idea too that expires on Monday. So this is a hedge for Monday. We'll see. All right. So what do you guys want to talk about? Hang on. I'm going to go see what's up with them. Make sure there's no one at the door. Okay, I'm back. I got Jackson locked in here, and I shut the door. The mailman's outside. They're barking at the mailman, of course. All right, so let's take questions now. William said, "Good afternoon." So how do you go along the VIX? There's a jillion ways to do it, but every book I've ever read says not to do it. The VIX is a professional instrument. It is based on it. So I like to see what you guys say. But me, the last time I did it, I bought UVIX, which is an ETF. I bought UVIX call spreads, I believe, or did some kind of. I may have sold it. But I did some type of my typical trade. But I use UVIX, and you can also use UVXY. For years, I used UVXY. A YouTuber that I follow that's not even a fintech person, just a computer person. Back before COVID, her dad is a trader, or not a professional trader, but likes to trade. Anyway, she was making content on it. She said, "Yeah, my dad told me about this stock, and I bought 1,000 shares or something, and it was UVXY, and she got it before, and she sold it and bought a Tesla with it." Anyway, but so the old days, UVXY was kind of the way that amateurs, like people like her dad's like an accountant or something, or whatever. That the retail would try to get long. You can buy shares in UVXY. You can buy shares in UVIX. Of course, I prefer derivatives, but you can make use cases for both of them. Does anyone else in here ever try to get long volatility? And when I say every book that I've ever read, or you go to a lot of YouTube videos, a lot of traders just say there's nuances to that. It's on a different expiration cycle, and I'm talking specifically about the VIX. So let me show you this. Let's just do a bull call from the VIX. What is cool about the VIX is it is an actual, I believe it's a cash settled index. So it trades in Chicago. But here's the thing to it though. It's not really a cash settled index. That's the nuance. And this is where people there's different VIXs, because the VIX follows, you have to choose an expiration. So all the VIX index is really the futures price, but in Chicago they add options to it and you could trade it. So like you have to say, but they don't expire on Friday. They have like a weird expiration schedule. So these expire February 11th. They expire next Wednesday. They call that VIXpiration. Lots of times the time period between VIXpiration and expiration, especially triple witching, so that this year that would be between like February 18th and watch this. So yeah, between February 18th and February 20th, that they usually call that lots of traders like to sell that time frame between VIXpiration and expiration, because the technical issues is traditionally, it can be weak or whatever. Anyway, but yeah, this instrument. So let's see here. So let's pull up a chart of the VIX and let's see. But there's way more. I'm trying to say there's way more moving parts than there is to trade the SPY or something. But you could trade something like UVIX or UVXY, and there's other ones. and they have, and they'll expire on Friday. They're ETFs, and they're going to be more like what you might be used to, but they aren't perfect either. But anyway, all right. So the VIX right now is trading at 1863. So we always hear, you hear about the VIX, So yeah, it's trying to think. I think I did back in 2021 do some call spreads on it, or I have bought it before. It's also really, if I remember, it's a really big contract too. Kind of like the SPX. It's more of a commercial contract. So here's what I would do. So here's a way to protect ourselves. If you want to try to get long volatility, say let's say till February 20th, because VIX expiration is the 18th. Just say we're going to try to cover ourselves till SPX expiration. Lots of times the SPX expiration will start a new trend. Obviously, unfortunately, it looks like we're going to may go down until then, but maybe that'll be a good place. So maybe we want to protect up until that date is what I'm trying to show. So we could use UVIX. They have really liquid options. Now it is double long though, so it has leverage, so it decays. But you could also use UVXY. I think UVXY is only levered 1.5 times, and UVIX is levered twice. Anyway, you pick one of those. The thing is, because it's levered, the price isn't going to correlate to, price won't correlate to VIX. The cool thing about trading VIX is it trades at 18 when the VIX is at, it trades where the price of the futures contract is for that month. So VIX futures are at 19. That's where VIX trades. So you don't have to get to know a new numbering system. It's 10 and 15 is kind of low, and anything above 20 is kind of high, and anything above 30, it's the same. It's the same thing. This could be, you could be trading at 6 and it could be super high vol or not, or super low vol, because they have to split this so many times because of all the decay that comes off an instrument like this. So that's maybe another reason why I went buy stock in this. But what a lot of people, or what you could do, so we'll go out to 620, and I usually just do some kind of, you could just buy the 6 strike call. It's only 73. That doesn't seem very expensive. Oh, because they're so far out of the money. Okay, yeah, because the VIX is only trading at 5. So the odds of it even getting back to 6, well, it's a delta of 55. Anyway, whatever. So that's about where the market maybe expects it. That's kind of let's maybe buy the 7. The 7 is a 40 delta. You get a little bit more bang for your buck. Plenty of volume and open interest. Bid and ask 44 to 60 cents. That's kind of rough. Let's check UVXY. I didn't have a problem getting, and this one's even worse. That's why people are trading UVIX lately. I didn't have a problem with UVIX. I thought it was fine. Anyway, but you do something like this. A person could maybe, if they were trying to hedge an account, they could maybe, so this trade's a $40 debit. The call actually costs 52, but by writing a higher call, you can finance some of it. Let's try to get half the money back. Well, there's 20 cents. We got a good portion of the money back. So here we go, $31 right there. It's a possible about 15 bagger, but we need this index to go to 12, and it's only a 5 right now. But it's double levered. Remember that it's so it's not like a stock that's at 5. It'd be like a double levered. So it's possible. It's possible, but it's also possible it goes nowhere. You lose all your money. It goes up. VIX goes up, but not more than 20%, and you lose all your money, or VIX goes down. But that'd be where I'd start off. That's a real basic. Well, let's just save that and see if that. So if let's say somebody has only $31. Let's just do this. Or let's do this. Let's hit linked legs and get like 20 of them, and pretend like we're trying to hedge an account or whatever. So that's $630. We'll just pretend we have a I don't know, $100,000 account or whatever. I mean, if there's some kind of blow up, this will cover 10% of it. If the market melts down between now, if you have a big stricken meltdown, also because this is, if you get halfway through, see what happens. So it actually looks like if volatility goes up, you make less, but I don't think that's true. Well, actually, it probably is. Anyway, whatever. Still, at expiration, it has to look like this at expiration, just because of the math. So, I mean, it doesn't matter where the volatility goes at expiration. It just, but once all the time comes out of this option, it snaps up there. That's all it was. So, yeah, so there we have it. So we'll just hedge for, is it triple witching? No, January, February, March. It is triple witching. That's another thing, especially triple witching option expirations. You remember the triple witching in March of 2020? I sure do. Anyway, triple witching option expirations can also be extra volatile, whatever. So we'll just call this a hedge for triple witching. And that's one of a jillion ways to do it. It may not be the best way. If you know a better way, tell me. I mean, it's a tricky instrument. We'll get, next time we get Matthew Tuttle on, or some real option trader, Mike Coe, Matthew Tuttle, Jay, an option trader. Next time we get a trader on that's traded on Wall Street, we'll ask him what they do with VIX. I believe Matthew told us last time also what he likes to do with VIX is he likes to trade those ETFs, but he'll wait for the price to pop, and then he'll wait for VIX to have a pop, and then somehow, trying to think what he does. Does he short VIX or he buys puts? That's right. You wouldn't think you could buy puts because you think, but anyway, he swears that way. So he'll buy puts into a VIX spike. It doesn't hedge your portfolio, but then as the VIX declines, you get all that. You get massive time decay. But we'll ask him if there's a way to positively play, volatility. We got Mike Coe is going to be on the show, I think, next Thursday from Max. I have David from Quantify. He's an option bro. We'll ask him what he does as well. But anyway, that's my idea right there. You could do it. You could also do this for a little extra convexity. You just sell 15 or you just sell 10. So you're doing a ratio. It's not really but anyway, you just something like that. And then if you get a really big meltdown, like a COVID or something, anyway. All right, but we aren't going to save that trade. I was just showing that to you, so I'm just going to X out of that. All right, so what else you guys want to talk about? So you're selling calls on the leap when VIX rises. That's what Retire says. Selling calls on the leap when VIX rises. On the VIX leap, I didn't even know VIX had leaps. Or on the UVIX leap. That's not a bad idea. I like that idea. Yeah, and Mark's made a lot of money on UVIX, also lost a lot. It's a tricky instrument. I'm just trying to, everything I've ever read, anytime you talk to a trader, I mean, I don't think I've ever read anyone that recommends that retail trades VIX. I mean, it's a specialty. But I mean, the ETFs make it where it is somewhat tradable. The cool thing is in the old days to get everyone wanted to be short volatility in VIX, and there was no real way to do that. You could buy UVXY and you were long volatility, but there wasn't a really effective way. But anyway, nowadays they have tons of ways. They have there's tons of ways. One way to get long volatility is just by spike calls. I mean, but if you want to directly, you can benefit from, or you could benefit from short. I'm sorry, you could benefit from short volatility with spike calls, but you can also use, they have inverse VIX, so you can buy like VIXY. Is that bullish or an inverse one? Let me look at that. No, they have UVIX and SVIX. UVIX is bullish on VIX, meaning it's for hedging. It goes up when the market goes to heck. SVIX is the opposite. It's like the market. It should generally drift up because volatility generally contracts, kind of like the market generally. I mean, that's the idea anyway. So you don't, in the old days, you would have to do, you couldn't really get short volatility that I know of that effectively. But SVIX, now you can do it. You can just buy SVIX, and if volatility gets crushed, like it has since April, you're fine. But then if volatility goes up, the price of your SVIX shares go down. Yeah, good call. And then there's VIX-E. Let me see, or VIX-Y, let's just say. Thank you for reminding me of that, RJ. RJ's the VIX-Y. So this is a hedge one. This goes opposite of the market. But it goes the direction of VIX. VIX goes this way over time, where volatility goes that way over time, just kind of the same way the market generally goes that way. They cross. And there's other ones out there. UVIX vol is double long. Okay. You're holding SVol inverse fix low VIR. Yeah. So SVol was a way. SVol is actually shorting. That means short volatility. And the way they used to do it, it was literally short volatility, but they added a bunch of other things. But yeah, it is still SVol is short volatility. Meaning this is a bullish fund. If the market does well, you want to own this fund. It should drift up. The market does bad, it's okay. But there's other ones. RJ says what I need for this week is a BTC short ETF and an Ether short. Yeah, they have those, don't they? Why don't you just buy a put spread? But I get you. It's nice to have ETFs or just have a short ETF and you could just buy a couple thousand shares, a couple hundred shares, whatever. You could just buy shares. I mean, that's cool too. And that way you don't have to worry about decay and stuff. All right, BITI and SBIT for Bitcoin short, and yeah, SETH and ETHD for Ethereum. Good call. Marcus concurred. Bank mergers are coming soon, so XL5 looks good for option-based sector ETF. Do you guys think, I wonder if I'll remember all those. Remember on last night's show, I made up mnemonics to remember all those? All right. Mayor saying Austin Axe, thanks for explaining to you. Anytime. I would basically, to sum it all up, I would start with the UVIX call spread, to hedge. And then whenever you're fine with the market, just stay out of it. I wouldn't go the other way. A lot of people play volatility collapse, but your portfolio should be doing well when volatility collapses. I just think it's good to get long occasionally, but that's just me. Careful things that tank can shoot up. Oh, absolutely. Now that's the case for options. That is the case for options right there, because you can only lose what you put in. You don't have one-to-one loss on the upside. When you short something, like you do if you short a stock. Even if you put a stop loss there, it's still one-to-one. It's till the stop loss, and stop losses are useless because it always hits it before it goes in your favor. It seems like always hits mine anyway. All right, so let's look at some other stuff here today. So this show's a little bit earlier than we've been having them, which is good. So we've talked about total stuff. We talked about the divas. I mean, we have all kinds of. Did everyone miss last night? X Marks the Spot was the name of the nightly show, and Exxon Mobil, which was XOMO, the high yield fund, was actually the winner. But didn't I give it to something else? I think I may have. I don't know. No, I think it's you can't go away. XOMO's killing it. I mean, you can't go away from that. But I like this. This kind of shows how the max factor is sensitive to trend and momentum. And as things become popular and get trend and momentum, they rise to the top of the list and others fall. All right, so that was last night. Let's see what else I had to show you. This was yesterday's daily Seagull hedge. I made content on that. Here was Monday night show for Monday. And Bernie won on Monday night. That's insane. Bernie paid a 21% yield with a 23% NAV return positive. Anyway, every dog has its day. We talked about this morning, didn't we? We talked about that this morning. All right, and this is the top 20 as of last Friday. If anyone, I mean, I just like to keep this window open in case we want to go back and look at where did HDLB come from. I say that every time I see it. HDLB. Oh yeah, it's a. Don't tell. I do this every time. It's a some type of dividend. I don't think it's options. I think it's like a dividend portfolio up. Okay, yeah, monthly, but 2x levered, high dividend. Oh no, that's right. Okay, all right. So let's go down and look at the top 10 holdings. Man, why don't I have some of this? What is going on with this thing the past 4 days? Holy cow! I mean, okay, it's levered. So our levered, I guess, levered high dividend, low vol. Maybe because all the high vol stuff's dropping, like, or the high beta stuff, like AMD's getting, being crushed. The low volatility stuff's. I mean, man, what a great little fund there. And that's it's an ETF, but it doesn't show the top 10 holdings. I wonder. It may just maybe it's all not banknotes. So it's all like swaps, but even usually they still put swap or well, that's kind of weird. That's an interesting. Let's go look at this a little bit more. That's why I love the max factor, and that's why I invented it, because I was tired about being surprised. I'm still surprised by this one, but at least I noticed it. Whereas, in another month, this may be the best fund on the street, and I had never heard of it lots of times if I didn't have the max factor to bring stuff to my attention. All right, so any of you guys have any of this? It's from the SLVO GLDI family. That's good to know. Yeah, that's good to know. But I'm just, how the heck is it up so much? Is it, MLPs, or it has oil exposure. That would explain, maybe that would explain coupons, performance index, key risk. I just want more information on this. Coupons, what's coupons? Like the I call that a dividend on a stock. On an ETF, it's called a dividend, not a coupon, but maybe they own bonds. Maybe they're just showing the coupons of the bonds they own. Or no, they're just calling dividends coupons, or I think coupon. Let's just look at key risk, because I can't figure this out. I mean, all right, you may lose all or a portion of your investment. Correlation and compounding risk. Well, I want to know what's in this darn thing. It shows you what they're paying and what they're paying to finance the margin. They're paying SOFR plus a quarter point, it looks like, or something, or well, SOFR plus a quarter point, then plus 80 bips. So there is an index. I guess I have to go look at the index to find out which funds are in here. Well, luckily I'm not doing anything else right now. I don't have any other plans. Well, let's go look it up. Solactive's interesting. You guys realize Solactive is the company behind FEPI. Because FEPI is a good fund, but it just follows an index. I mean, the FEPI portfolio managers are trade options on the index that Solactive gives it. And so they have a lot of cool indexes. So I just want to see maybe if we can see what holdings are in this. Surely documents, index. But does it not say holdings anywhere? Or methodology or anything? Anyway, they do have holdings somewhere. I just don't know where they are. Selective has thousands, or seemingly thousands of indices. Well, anyway, that's an interesting fund. It's an ETN. That's right. You're right. Okay. It didn't say closed-end fund. So I was thinking, okay, well, it's got to be an ETF. You're right. The ones that don't say closed-end funds could either be an ETF or an ETN. That would explain everything. You would have to look at the counterparty. Yeah, you have to look at the index. I looked at the index, but somewhere there they publish the. I bet they reconstitute the index every quarter, and they have a list of those names somewhere. It's not that big a deal. Yeah, real estate and energy. I think we kind of figured out it might be energy because energy's been the one thing that's up. But yeah, real estate too. It looks Google's up now. I'm looking at Google. It's back up. Hopefully the market will go back up. Let's see what future. Yeah, futures are rallying. Or now it's this fall. Okay, 5-minute futures. I wonder why TradingView can't give you a decent. So when you switch time frames, why can't it remember your last? Instead of having to reset it every time. Anyway, okay. Well, this has the SPY has reverted to mean. Well, on the 5-minute chart, which is what day traders might look at it or something. But we sold way off into the into lunch, bounced into the close. Sold off a little bit when Google's earnings first were announced, right after 3. Actually, lost about half the day's gains. Or not anyway. But then, and now we're rocketing upwards. Yeah, now that they're getting into it, it's looking like things are better. But yeah, mean on this chart is 6,900. So if you're bearish, it might be a decent time to initiate a short, but if you were bullish, you want to trade back into the mean is the way I've always been taught from outside in. But anyway, so try to wait till it gets to where you think it's too far away and try to make a trade for back into it. You can do the same thing this way on the downside. It gets too high and you can use the mean for your target. All right. But yeah, real estate and energy, that makes sense. Old money holdings, yeah, that makes sense too. All right, where is, trucking for dividends, REITs and energy? Yeah, explanation why, GARS, GAR, yeah, same explanation. I forgot about GARA. The trucking for dividends is here. You are not allowed to buy HDLB for some reason from IDKR. Interesting. So RJ, you're talking here about this. RJ is saying he likes the sector option-based ETFs, XLUI for utilities, and has been good. Did you see the show last night? And it was Marcus. What was that fund you told? EDGU. Have you seen this? Check this out. And maybe if you were there last night, I apologize, but maybe somebody else that wasn't might like this. So then Marcus, is saying, well, check out EDGU. So I check it out. It looks like it's basically a fund-to-fund of the State Street funds. I haven't read the prospectus, but they own most all of the State Street funds. Their biggest holding is XLK. And they do have some other ones too. They have some American Centuries, some small cap is 15%. And then they have the Qs. That's a pretty good ETF, I heard. Maybe, not lately, but anyway, I think this is cool because I bet they just reallocate amongst the sectors as they see fit. And they're obviously doing pretty gosh darn well. It looks like they only pay quarterly dividends. So I thought that was pretty interesting. That was a good call. Yeah, that was a good call, Marcus. EDGU is mostly the spider sector. So what? Then we went on a hedged equity bender last night and we started talking about K-SPY. And then, and of course, Mayor gave me K-SPY in an email. K-SPY's chart looks just like HDLB or whatever. Basically, it looks like it. It's probably, anyway, it's not up as much. It's probably not up as much on percentage basis, but yeah, these hedged equities funds can be all right. Yeah, darn it. Trucking for dividends talk about HOOW being a bad day. Pretty much anything that you wanted to have this time last year. Well, maybe not this exact time last year, but anything that you wanted to have most of the year last year, like AMD or whatever, is just they're just taking out the woodshed, and that goes for Hood. Hood's been getting killed lately. I got stuck freaking too heavy in tech. Although luckily though, I didn't really get stuck because I'm hedged. But I mean, I didn't see this coming. I'm blindsided right now on my. I didn't see this coming on tech. I didn't see AMD being up. I mean, this much. I didn't see this happening. But you know, obviously, I wouldn't have had as much blocks or whatever. I probably, if I really would have seen this coming, I would have got stuff like safer stuff. Anyway, all right. Well, I did get some safer stuff, so it's partial victories. All right, and what were there were some other ones. There's one just today that there's a new. Is it this one? I think Mayor sent me a different one, or somebody else told me about. It was KQQI or they're coming out with these every day. Oh, does anyone have? There's the new hottest fund on the street is called Styx. You guys have heard of that, right? STYX. No, TSYX. I'm just joking. TSYX. Everyone happy with that one so far? Of course, it was down today, but it paid its first dividend. We talked about that last night also. 9 cents, actually 9.8. RJ, Bitcoin trying to get under 70 to 9. You got to be kidding me. Why are you? Where did you come up? Who says who? So I want to talk to the manager. I want to talk to the manager. I'm going to be a Karen. I'm not. Well, but Bitcoin's not going to go under 70 tonight. Well, who said that? I want to talk to whoever's manager, the person that's spreading that utter BS. BS. Bitcoin. Oh my God! You got to be kidding me! I haven't seen that yet. Holy cow! It'll be under 70 within the hour. Holy cow! All right. Well. Max LVHD, same index like UBS, different. Okay. All right, let's check that stuff out. Well, yeah, that is that's not good. Is that because of earnings or something? I mean, Alphabet right now is up 2%, $5. Come on. Oh yeah, was I supposed to check? Oh, LVHD, yes, sir. I'm going to open my door now so I can make sure the other dog's not misbehaving. Hang on just a second. All right, everyone's good. He's sleeping by the window. And I told you tomorrow I'm going to have, 3 dogs. And then this time, Friday, I'm going to have 4 dogs. I'll do a special live stream with all 4 dogs. You guys have met Jax and you met the big white boxer. His name's Aspen or Big Dog. But I'm going to have 2 other dogs also. So it's going to be a zoo. All right. So this is the Franklin U.S. low volatility high dividend. Okay. Well, obviously this index so it's based on selective also, I guess. What a great index. You know me, I like stuff. I like to know stuff right now. I just want a quick summary of the holdings or the strategy. Okay, let me try to scan this really quick. Okay, so they're calling it large cap value. Well, yeah, value. I get the value part, and value's definitely coming back in style. I mean, with growth selling off, I kind of guessed the value part of it, but the high dividend part of it, I guess that's where value comes from. The low volatility part of it's kind of interesting to me also. So the ETF has its heaviest allocation to utilities. That's what Marcus said about, or several of you guys said that. About a quarter of the portfolio. Consumer staples and real estate round out the top 3. I don't remember what consumer staples is on State Street. Do any of you guys know? I know consumer non-discretionary is XLY, but I don't remember what mnemonic I use for staples. Anyway, all right. Looking at individual holdings, at Cisco is about 3%, Chevron, American Electric Power. Performance and risk, they seek to match the index. the ETF's gained about 7 points. I'd like to see what that index has done over the years. The ETF has a beta of 65. That's really good. So this thing is only, you know, I just realized something. On the max factor, I call something called the stable dex, but it's the beta. What I'm showing is the stable dex is, because all I do is I look at anyway, I just invented the beta index. I just realized that. I think I'm actually showing the beta. Anyway, but the beta, it means it's 65% as dangerous or as volatile as the market as a whole. And that's the exact same thing I show with all those ETFs. I'm just going to change the name to beta. Stable dex sounds cool, but anyway, all right. I just realized that. All right. And a standard deviation of 12.17, which is pretty low, with about 121 holdings, diversifying risk, alternatives, style box, large cap value. They're saying alternatives are SCHD and Vanguard value. Okay, so let's do a little SCHD. Well, we know this is going to spank SCHD. There's no reason to. Yeah, that's interesting. Thank you for whoever brought that up. XLP. Okay, so P is staples. So I'm going to remember. I don't think we got to staples last night because I just don't remember that. So how would I remember that? I mean, I guess because staple has a P in it, or P is poor. That's more the way I think. I could have used C for cheap, but XLC, no, P describes it. So because it's either XLY, like why did I spend that much money, or XLP, like I'm too poor, I just got to get the basic stuff. All right, XLP. XLSI is the consumer state. Oh, they didn't stick with the same nomenclature, did they? So, okay, that explains it. That's why I didn't have it right, because I was going off that. I was just assuming it was XLS, but it's XLP. Okay, well, my bad. So ignore what I just said. XLSI is the income fund for XLP. XLP, I got it. I'll never forget again. There's XLY, there's XLP, there's XLB, which is materials. Remember that for building. And then there's XLF is finance, XLK is tech, XLI is industrial. Anyway, I think we got them now. But XLSI is the one. Well, now XLP is the one new one I need to remember. But I got it. I think we got him now. All right, guys. Well, I think I'm gonna get out of here. I think we did we got done a lot earlier than we usually do. It's only 5:14 on the East Coast, so you guys have go have a good evening. And for getting done earlier, I'm gonna try to do the daily factor at 7, so it's 8. So you guys are still up, even though we're having great late night shows. Last night's late night show was awesome. It went on for like an hour and a half. We had a great time. But let's just try to have one more like at a regular time. So I'll be here at 8 o'clock Eastern. And what do you guys want to do? It can be anything except closed-end funds. No, I'm just joking. You know the reason I don't like to do the closed-end fund show? Because it's hard to figure. I don't have it coded for an easy way just to extract the closed-end funds. So I have to go through all 210 of those and pick out which ones are closed-end funds. Then inevitably, I mess a few of them up and I get frustrated. Anyway, I don't really have a problem with closed-end funds. Let's stick with the same theme we're doing. Let's just pick some letters. Let's somebody here, RJ, give me a letter. RJ, give me a letter, and then Jameson, give me a letter, and then Skeptic, give me a letter. And we're going to go decide what we're going to look at tonight. And I'm going to open in fact, we can look at it right here. So I think I have the factor. I have the total sheet somewhere here. It's called the Factor Zoo. Hang on here. Factor Zoo. Where is it? Factor. There it is. Factor Zoo. This is the entire database. Okay. So, and let's just sort it by letter. All right. So give me letters. I want some letters here. Okay. So we have, well, Jameson said D. Mark said I, and Marcus said K. Do you think these guys are trying to tell me something? What are you guys? I'm just joking. No one said I. No one said I. All right. You guys love me. I know. All right. Jameson did say D. Marcus said K. So we did XYZ last night. So we can't have XYZ again. But we're going to have DK. And oh, it's an ETF. Okay, I'm sorry. I'll pull it up. Anyway, so DK, and I need one other letter. Maybe Mark's not here. Somebody else put a first person to put a letter up. We'll do that later. So if there's a fund you want to do, put your funds. You know, if you're a big fan of, you know, whatever WDTE, put W down, and then okay, Devo. Okay, so you want so. All right. Well, anyway, Jameson. Well, we're waiting for more letters. I'll look at your ETF DXYZ. Oh, okay. Destiny Tech 100. I mean, it's not behaving as bad today as the rest of the tech business, as the NASDAQ, but of course it's not doing as well just on NAV, and you could see it doesn't have dividends. So, and is this an ATN also, I'm thinking, because it doesn't have a top 10 list? Anyway. Oh, buy this one stock hand over fist before SpaceX goes public. It's a SpaceX fund. I get it. Yeah, I get it. I mean, it probably has an allocation to SpaceX. So it's a way to get, 23% SpaceX. Okay. All right. Well, let's talk about this. Okay. So I guess we just have D and K. So let's see what the D and Ks are. Let's see if that's enough. We may not need a third. We may not need a third letter. Where's the factor Z? Where is the factor Z? Okay. So the Ds and Ks. So we're going to have tonight, on tonight's show, we're going to be looking at Dizzo. I think Dizzo might win. No, I'm just joking. Dizzo, Devo, DOGG. All right, there's only 3, so we probably need another letter. There's only 3 Ds. Yeah, so, and then how many Ks are there? Probably not a lot of Ks. Let's go look. HIJK. A lot of I's would be a good letter. HIJK. All right, then on the Ks, we have K Gold, Clip, K Triple Q, K Silv. So that's 7. That's not too bad. I mean, sometimes it's better when we don't just have 20 because the show goes on forever and stuff, especially when they're 20 closed-end funds, and I have no idea what they are. But we could probably do one more. 7's not enough. I like to compare 10 to 15. So I guess I could pick a letter because no one else picked a letter. So I'll just randomly go whatever it lands on. Okay, it landed on 6. The letter it's closest to. Okay, that letter U. It's right between a U and an L. So, God, I don't want to do U because I don't want to be depressed about Alti. But it is what it is. You need to live in reality. Let's just do U. Let's do U. Okay, so tonight's show is DKU. All right. Be here at 8 o'clock Eastern. It's going to be a good time. We'll look at the Ds and the Ks and the Us. I do not think ULTY is probably going to win. What's going to win? Probably Devo. And Devo's been doing really well, or iDevo's really been doing well. Probably one of those that's energy. It's probably going to be energy or gold based. Probably it's K. We're doing K, K silver, K gold. Well, but I don't know after the most recent pullback. It should be interesting. It should really be interesting. All right, guys. Well, thank you so much. And I hope you guys liked everything that we talked about. And oh yeah, also do not forget, this is not financial advice. Check anything you hear here with the financial planner. If you care to support the station, you can always do that at paypal.me/maxconvexity. Also, don't forget, you could also like and subscribe if you'd like. Outside of that, I will see you at 8 tonight. Later, guys.